You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Welcome back to Mining Stock Education. I'm your host, Bill Powers. Thank you for tuning in. And back by popular demand is Mark Zaret. I spoke with Mark about 11 months ago, in which he laid out his investment philosophy and approach to investing in Canadian junior mining stocks. Mark has about 60% or so of his net worth that he's gained over the last few decades attributable to junior mining stocks, but he's also broadly invested in Canadian small cap stocks. So he's an expert at this. He's been able to make a full-time profession out of it to the point where people came to him asking for advice. So in addition to investing his own money, he is an advisor or an analyst to a fund. So Mark, thanks for coming back on the show today to share your insights a little further.
Nice to see you again, Bill.
All right, yes. And so last time we spoke, you mentioned that you don't get caught up in the hype of a bull market. And since we last spoke, the last 11 months would not be considered a bull. You don't get caught up in the hype of a bull market. And the last 11 months have not been considered in any way, shape, or form in junior mining stocks a bull market. So my question to you then is, on the flip side of that, when you're in a bear market, how do you cope? What would be your advice for investors in the market we're currently in?
Well, it's very different for people in the small cap space than it is for other investors, I would have to say. And that's primarily driven by the lack of liquidity. So I guess what I mean by that is, if you were managing large cap stocks and you woke up and you decided you wanted to be in 100% cash, you could probably do that by lunchtime, because they trade millions of shares a day, and you'd take your knock and you'd be gone. In the case of small cap, illiquid micro caps in Canada especially, there's no opportunity to do that. Once the bids sort of dry up, once the market kind of goes into a negative direction, exiting positions becomes a pretty impossible type of situation. So, I mean, not to say that it's not possible, but you're going to be knocking prices down, and in some cases substantially. And so, whether you want to do that or not, it does become a trickier exercise. Let's put it that way. How do you manage your way through it? I think really you have to just do a thorough house cleaning review of your entire methodology, if you like, and decide, probably position by position, exactly why you're in this name. How did you get there, and go accordingly. So just to flesh it out a little bit more, if you got into a name for a trade, say goodbye. Just get out. If the trade is not working out, one of the big mistakes I think investors make is they hang on to their trades, and then they end up selling their good investments to pay for the trade that didn't work out. We've all done that. It's what's that called? Risk loss aversion, and so we've all been guilty of that. So I would say, if a position is in your portfolio and started as a trade, probably the best thing is to just get rid of those kind of things, free up the cash, take the tax loss, etc. On the other hand, if you got into names for an investment, then I think once again, this becomes an area where traditional thinking doesn't necessarily apply. So in other words, we're all taught by many people don't average down. That a little bit of a theme, I guess, in the investment world. I don't know that it's true in our world. In our world, if your thesis is strong, if the reason you got in is a good one, then taking advantage of cheaper prices, to me, is the same as buying groceries on sale. It doesn't. You're not scared away when things go on sale. You try and take advantage of it. So I think if you've had a good thesis, good reasoning for why you're in, then you just have to suck it up, to stay with the names, try and buy them when they're on sale, and hang tight. And it's not easy. There's absolutely no question about that.
So when it comes to an exploration stock, you may like the thesis. And so the geological data is there, the qualified management team is there, but in this market, the cash may not be there. So in that scenario, when they might have to give away half the company just to raise a decent amount of cash, how do you go about with an exploration company position in this market?
Yeah, that's a very good point, Bill. So we can try and start to break it down perhaps a little bit further. You've got a name, you like it, you like management. It still ticks all those boxes. There's good insider ownership, good share structure, a good project. If they need cash, that's problematic. That might push it a little higher on the list of what do I do with this name. You either, in some cases, speak to management, find out what their plans are. If they really, if the boxes have been ticked, in other words, let's just go back and say this was a high insider ownership, they're not any more interested in diluting as you are. So they're trying to avoid that. And once again, I think it comes back to that selectivity process. So if they're going to resist, if they're going to sort of put projects, slow them down so they don't have to raise, all the better. If they do a big raise, again, problematic. That's another reason to consider moving along.
How do you compare the time we're in now to historical, the last 3 decades? Is this one of the worst bearish times in the junior mining sector that you've seen?
They always, when you're in the midst of it, they feel worse than the last one and so on. But if I really try and be objective about this, I think the very short answer is yes, this is brutal.
Worse than 2015, 2014.
Well, let's put it this way. I mean, you could argue whether, the venture exchange has an efficient system of calculating the index average. But if you think they're doing a half decent job, then if you look at that, you will see that we're actually not that far away from the lows of 2008. So from that perspective, we're down there, and valuations are. I mean, this is about as bad as it can get, and it might be worse next week. So who knows? It's very hard to know when these things end, but there are rational things you can do to help yourself sort of understand and get through it. I'll give you an example. Again, this is just in the mindset stuff. So in the large cap world, we have a thing called multiple compression, right? Where the average stock on the NASDAQ is trading at 40 times earnings, 30, 20, 10. So the multiples change based on sentiment, in the market. Well, we don't have earnings, so we can't look at that as some sort of a guideline. But what we can do is look at is sentiment as a compression, as a force that's either compressed or expanding. And when sentiment is this low, then that's kind of a good indicator. It's positive. And so how do you measure that? Well, try and find somebody who's bullish. You can't find anybody who's bullish. Everything is sort of scraping down at very low levels. And so I look at that as a sentiment indicator, for lack of a better way to put it. Like, just as another example, I remember one time watching a shell company, and in a very bad market, it traded at 17 cents a share. And in a very good market, it traded at $1 a share. But it was the same company.
With no asset.
It had a listing. And, we talked a lot last time about shells. This was a sort of atypical shell listed on the exchange, decent management group, very capable of doing deals. But that shows you, the extremes that the sentiment in the market can result in drastically different share prices. Identical company, identical balance sheet, identical people. That's quite a spread. So, if you look at your 6 or 7 or 8 cent penny stock right now, and you can say, well, what can change? Well, that's the primary driver, is sentiment. That will be the first thing that will bring some life back, is when people start to feel a little more optimistic.
In your portfolio, and again, you advise a fund, you're an analyst. How much cash are you percentage-wise are you positioning yourself with right now?
You mean ideally or in reality?
Yeah, both.
I have a view that basically says that, people shouldn't be paying fees for funds that hold cash. I just don't agree with that. So that results in a situation where you're, typically fairly highly invested. And then every now and then, you have a liquidation event of hopefully a good thing. And so now you're running a higher degree of cash, and you're sort of steadily allocating it. Coming into this most recent down leg, I think we were probably somewhere around 15% cash available. It's not a very high number, and to be truthful, I mean, we're buying stock every day. Because if you don't do it now, my question would be, when would you do it? Are you waiting for the bottom? If you're waiting for the bottom, you're going to miss it.
Mm.
In particular, in the small cap world, I mean, there's no terminology for this, but one of the things I do is I look at a position and I say to myself, what would it take to replace that today? What's the replacement opportunity? And in most cases, it's extremely difficult. So again, with the lack of liquidity, it works both ways. It can, harm you on the upside if you're actually trying to build a position in something if there's no liquidity. So I look at a position where, maybe no names mentioned, but maybe we own 1 million shares of a company and it's trading 20,000 a day. How do you can't easily replace that. So that's one way that I look at things that are perhaps a little bit different. But again, the conviction has to be there in front of all that to warrant, having that position and wanting to stick with it, and not being in a position that you have to sell it, which is another part of the trickiness of the whole thing, right? Is to try and make sure that you're never in a position where you have to sell. So from that point of view, you never really want to be leveraged in this world, and we don't get very involved in that.
Have you had any winners over the past 11 months since we last spoke?
Wow, I'd have to have
and 20% is a winner in this market too.
Well, I can't think of a name right now, but I will tell you that I'm harvesting some losses to offset some wins from earlier in the year, because it's ridiculous to pay taxes when you're on closed positions, when you're carrying some open ones that you no longer believe in. Mm-hmm. So there weren't big gains, but they're being offset as we speak with some losses. So there were no big, there's nothing really big to talk about. They've been few and far between. In fact, 11 months, I can't quite believe it, Bill, but if any of your listeners have a higher net worth today as a result of their activity in the junior markets, could you, can I get their contact info? I'd like to talk to them. It's been it's been pretty rough.
The only way you can do that is if you're over positioned in a stock that actually went up multiples, I think, in the last year, because even private placements I've done 6 months ago, they're down 50% with no buyers. And now at this point, no sellers too. To your point, I'm not worried because I know that just a little buying is going to double the stock immediately. And then a little more buying can send the stock fourfold from where it is right now.
Well, that's exactly true. And that's why I look at that sort of replacement cost or replacement opportunity. And if it's very low and I still believe in the name, I'm going to be holding it right through this. And I've seen this before. I've been here, many, many times. I don't know that this, when people say this time it's different. No, I don't think so. I don't think so. I don't think the world is ending. I don't necessarily agree with a lot of policies from our governments, but I don't think it's all going to end just. No, we're going to go through. If you took a hard look at, the Dow Jones average, for example, over the last 100 years, you'd have to squint to find 1929. you can barely see bear markets of the past. We tend to over time have rising markets, and probably one thing you could say about today is that nobody's saying, by the way, is that you could say this is a garden variety correction. Now it feels a lot worse than that to us in our world of junior mining stocks, but in the bigger world, we're just getting rid of a lot of froth that developed over the last 10, 12 years. And we'll scrape around for a while. We'll find a bottom, and circumstances will lead to a recovery. And probably, again, this will be hard to find on the charts in 10 years from now.
So, Mark, in light of those comments, you're more of a bottom-up investor then, rather than a top-down. You don't start with the macro. You would look for the fundamentals of a given small cap stock.
Absolutely, yeah, yeah. So, in a market like this, there's lots of things to buy. Because if I'm not worried about the world ending, I'm seeing value. I'm seeing opportunity. I'm seeing situations that would not be where they were if it weren't for the macro. And so if the fundamentals of the company are strong, again, all prefaced with how do we define strong in our world of mining juniors. But if you come to the determination that they're strong, yeah, you have to stay with the stories and if you can, average down, because this is the kind of investment where averaging down actually, to me, in my way of thinking, is logical, sensible.
Can you share some names that you are averaging down in or holding on to in this market?
One name I might mention as an example, the symbol is FOR, Fortune Bay, trades on the venture. The interesting thing here is they have a 1 million share deposit in Saskatchewan.
Million ounce, you mean?
Sorry. 1 million ounces in Saskatchewan at about 1.5 grams grade in open pit. And they have another deposit in Mexico, which again is in the area of 1 million ounces, over 1 gram, again, another potential open pit. So the company has 2 million ounces of gold in two deposits that are, I'm not going to say they're going into production tomorrow. They're not. Nor will this ever be a production company. Those assets will likely get sold one day. But what are they trading for? What's their value today? Their value is, if you do the math on the share count and the share price, it works out to about $6 an ounce. So if you go on the net and you do a bunch of searches for what are ounces in the ground worth, you get all kinds of different numbers come up. And of course, it's all political jurisdiction matters, all kinds of things come in. But the low end of what measured and indicated, and I'm not even going to refer to mention inferred, because that's a category lower. If we just stick to measured and indicated, the cheaper stocks are usually mentioned around, the cheaper valuation, I should say, is mentioned around $20 in the ground, an ounce in the ground. So we're trading here at about a quarter of that. Company has a couple of $1 million in the treasury. It has Dale Varon is operating the company. He's formerly with the Lundin Group, quite well-known mining group. And what else can I say about it? Insiders own between 15 and 20%. In fact, earlier in the year, Bill, there was insider buying at 70 cents, and then there was more at 60, and then there was more at 50. Well, I think the last price is around 30 cents, 27, something like that. So,
and where did you get your position, if you don't mind sharing? Average cost basis, approximate. It's
been bought over a number of years, but I will say that it's now trading lower than our cost.
Okay.
So, because it's virtually never traded this low. I think it traded this low when it first was listed, and we participated in various rounds. And but I believe that at some point in the future, these deposits will realize some value.
So what's the best? What's the best way for a company such as this, if they have a couple $1 million in the bank? That's good, but it's not enough to really advance the project the way you'd want to see it. Would a rights offering be appropriate as a large shareholder? Is that something you would be okay with? Or Can you share with us what your expectations are of management in this situation?
I guess maybe as a result of patience, I would be perfectly fine if they sort of do a go slow policy, and that would be my chosen route.
And lower their salaries as a result of it if they're not working as hard, charge the company less.
And you don't drink, right, Bill?
I don't drink.
Is that true?
That's true. Yeah.
Lowering salaries. All right. Yeah, I don't know. Maybe. Let's face it, that rarely happens in our world. But just, not pushing ahead with a big drill program, let's say right now, because it would just create too much dilution. They may end up doing a small raise. I would be fine with that. If again, some companies don't think that slowing down activity is the right way. Rights offerings are great. Rights offerings are the most, I think, friendly manner of raising capital that's out there. So I'm okay with a small raise or a rights offering, but again, good share structure, good management commitment. And lastly, on that one particular name is that they're also Dale worked for Denison. So he's very familiar with uranium in Saskatchewan, and they also have some uranium prospects. So, in fairness, they would not have, you couldn't attribute value to them right now, but they're interesting. They used to be owned by Cameco, who let them go after, they had their flood and so on. So
have they told the market about those assets effectively? Because, the uranium stocks were running pretty hard last year.
Yeah, they did some uranium work this year, and the results were not what was hoped for. But again, they were early stage, and as you probably know, so many mines and so many, very, very great projects takes dozens of drill holes before they hit the mother lode. So,
Mark, I was listening to our last interview in preparation for this conversation, and one of the things that you stressed there, or that came across at least for me, and you just said it again, is the need for patience. Now, when you talk about small caps, we want to make outsized gains, so we tend to get greedy, and we tend to be impatient. And I don't need to look to anybody else besides myself. So right. As I'm listening to you talk with this company you just lifted up, what is your time frame for success? What are you willing to give management, the time frame to make you money here?
Yeah, I don't have a time frame.
That could be shocking because this is not Ford Motor Company or GM. This is a small cap, non-revenue company, but yet you're willing to sit back and be patient.
Yeah, absolutely. In fact, I've been invested in this name since the day it was listed. It started out as a spin out from a buyout. So it was a stubco. And, when do you leave? You leave when management disappoints you in a big way, or so much time has passed, let's say, that the share count has gotten to a point where it's more difficult for them to raise capital. There's some sort of signposts that are saying it's time. And that's, until I see that, I have patience. And so I guess share count is one of them. Important people leaving the company might be another. Seeing insider selling, of course, causes little hairs on my arm to stand up. So gone. You don't want to see insider selling. You have to just monitor those kind of things. As long as those things aren't happening, I have patience. I don't worry about time.
Would you be willing to share another name?
Something that comes to mind. Now I know you're called Mining Stock Education, but we do talk about oil and gas a little bit.
I like oil and gas personally.
Well, one name that comes to mind is Tenaz Energy. The symbol is TNZ. Trades on Toronto. I can't find anything to really not like here. What do I start with? This was a reorganization that happened, I guess, about a year ago, late last year, where a new management group took over a small producer, and they did a 1-for-10 reorganization, a 1-for-10 rollback. They refinanced, and they're currently looking for big projects. While we're waiting for them to find a big project, they're producing about 1,100 barrels a day in Canada. They earned 3 cents a share in the last quarter, so they're positive. They're EBITDA positive, et cetera.
Cash flow metric, what are they trading at?
So
Cash flow multiple, excuse me.
I don't have the cash flow multiple at my fingertips, but I do have some other metrics that I think you might find interesting. When the company got recapitalized, new management group put in $5 million of their own money. And if I do the rollback, so I'll give you so that was the equivalent of $1.80 that they put up $5 million of their own money, and the stock is currently trading about $1.50. So it's under their price. It's under the net asset value by the balance sheet of about $2.50 a share. But I haven't told you the most interesting thing about the company. The company is run by the same group that was very involved in building two very large companies. The first being Baytex Energy. So the gentleman I'm referring to here is Tony Marino. Tony Marino was with Baytex from 2007 to about 2012. And in that period of time, the value of Baytex went from about $1.5 billion to about $5.5 billion. This is a large company. It was a large company, still is to this day. It was actually an energy trust for a good number of years, but then they reconverted back to a regular company when the government took away certain incentives on trusts. And then he went from Baytex to Vermilion Energy. I think he was at Vermilion from around 2012. At that point in time, it was about a $4 billion company, turned into about a $7 billion company. And then, as is the case with a lot of oil and gas companies, the whole sector went in a bad way, and Vermilion's, suffered alongside of it. Ultimately, Tony left Vermilion, and his next project is Tenaz. So here's a guy who's been involved in building multi-billion-dollar companies, running a company now that has a market cap of about 40 million. Maybe just a little higher than 40 million, with 20 million in cash on the balance sheet. So that's why I say,
with long-term debt, or
no. This is like working capital, $20 million, not cash, working capital. So it's a clean balance sheet. That's why I say I'm not as informed perhaps as I could be on the current project, but frankly, I don't really care about it. And the reason I don't care about it is because I'm there for what Tony will hopefully build going forward. So, here's a guy who's, as I say, built multi-billion-dollar companies in international projects, put his own money in at $1.80. We can buy it now at a discount. And so just on the news that this new group had come in, the stock hit a high of about 370. So it's drifted down from 370 to $1.50 in this bad market. So that's another stock that I can feel very comfortable in mentioning, simply because I think I would determine it as a kind of deep value at this point. And one day the stock will get halted, and they'll announce hopefully a big acquisition, and then the analysts will start talking about it, and then it'll hit the news wires, and so on and so on. Oh, and while we're waiting, they're also doing a share buyback. That's how confident they are in their own future. They're not worried about spending a bit of the money in the treasury on their own stock, so they're buying and canceling because it is trading at a discount just to their current operation.
Interesting. Well, I will be checking that out this afternoon after we get off this call. Any more names, or is that good for today's show?
It's up to you, Bill. I mean, I can mention.
How about one more name?
One more?
Yeah, my hardcore audience loves this. So,
okay. Well, here's something a little bit different. I haven't been very involved in the lithium space, but we had an opportunity to get involved in a very early private round on a lithium company that's now gone public. Very unknown, they haven't done any sort of awareness programs or any of that sort of thing just yet. The company's symbol is GRD. It's grounded lithium. A couple of the interesting things here, Greg Smith is involved. So he was one of the founders and builders of a company called Petrobakan, which was grown from something like 2,000 barrels a day, ultimately to, I think it was approaching 50,000 barrels a day, became a very large company. So the credentials are there for Greg and having sort of done it before, so to speak. So lots of experience in the oil patch. Well, grounded lithium is interesting because there's a new space, or at least a new technology that's opening up, and it's basically called DLE, which is direct lithium extraction. So lithium is either produced by mining or it's produced in South America, mostly through not extraction, but what do you call it? Sun.
Yes, I know what you mean. The evaporation.
Evaporation. Yeah. Sorry. So those are the two primary ways that lithium are produced, and
they call it a brine, right?
The brines, right? Yeah. The brines, and the brines, by the way. Well, so there's some environmental issues around the brines, and there's also a fairly low recovery rate on brine. All this leading to the development of a relatively new technology called DLE, which is direct lithium extraction. There are a number of different companies working on different extraction processes. Some of them are very advanced. There are groups in China that are actually doing it at scale. It's a bit of a complicated area, but I think our bet is basically that DLE will become a much bigger area of investor interest going forward because of its potential to actually displace the existing methods of producing lithium. And so Grounded Lithium has a project in Saskatchewan where they've become aware, as many others now have, that there are liquids that they were coming across through the process of producing hydrocarbons that were actually rich in lithium. And so there are several now, but they're all, relatively early stage lithium brine companies in Canada, and mostly in Saskatchewan. And so that's what their project is. It's, again, there's some interesting features regarding the stock, I would have to say. So when they went public, which was only just a few months ago, the insider group is locked up for 3 years on their escrow program. The people that were involved in the private are 18 months. We are part of that. I think there could be a very interesting future for this technology. And it could be, as it develops, it will either be a trade or it will be an investment. It's a little too early to say, but I think we'll have to judge it by, how their reservoirs prove up, which they're in the midst of doing, and how the technology can be applied in their particular case.
So is it more of a technology play, even more so than a bet on lithium?
Yeah, there's a technology aspect to it, 100%. Yeah. But I would say that DLE is beyond a science project. I mean, it is being done successfully in a couple of instances. So, but yeah, it's not unfair to say that there's technology involved here.
Mark, when you're talking to CEOs, this is a conversation I was having with a friend recently, and you're asking the CEO what is coming down the pike. What catalyst can I look forward to? And sometimes they don't tell you specifically because they can't, but then they kind of make all these allusions and basically lead you to read between the lines like, hey, you don't want to be selling your shares, wink, wink. It's not the specific thing that they see coming. My question to you, because you have 3 decades at this, when you get that wink and a nod from a CEO in a private conversation without them disclosing the specific coming event, how many times on a percentage basis has what they alluded to actually occurred? Or was that just a means of getting you to stay with the company and not sell your shares? If you follow what I'm trying to communicate here.
Yeah, I do.
Okay.
I follow it quite well. My answer is kind of succinct. I consider it meaningless. In fact, in a way, I consider it a red flag.
Okay.
If you're ever on the phone with anyone who's sort of on the IR promotional side of things, and you're dealing with a stock price that's already, say it's up 20, 30%, and you've got that nice bullish formation on the chart, and they tell you that there's a promotion coming, what that translates to is it's happening now. Now is the time for you to consider an exit, if you like. My experience has been to really not pay attention very much to those kinds of indicators. But even more so, if somebody tells you that there's a big awareness program coming, no, it's happening now. You're part of it.
But what about an acquisition, not just an awareness program? Like if they're like, we got something coming, we're talking to different companies, just, hold on to your shares.
You have to take there's no free lunch really. So, if you're being told anything that's even remotely insider information and highly bullish, I just makes me very cautious. I don't get excited by it. Now, yeah, I mean, maybe the average person would think that that's a good reason to buy the stock, but I might suggest that they might be down 10 or 20%, 2 or 3 months later. That's just my humble experience with being told, oh wait, you won't believe what's coming. Okay, all right.
So when you're talking to a CEO, what are some of your best non-traditional questions that you ask a CEO? Because for those that have looked at junior mining stocks for any period of time, there's a general template that's out there that you can go through, but non-traditional questions for you that really get to the core of what you're wanting to learn.
Of all the things I've done to try and make this work, this business, probably the most valuable was bits and pieces of study in the area of understanding humans and psychology and, fear and greed and et cetera, et cetera. If you can actually understand what makes people tick, I think you have a bit of a leg up in this game. And so, to answer your question, I mean, if you're sitting across the table from someone, I think there's ways to read people, so I think you can learn what is kind of something that is bullish versus bearish, or exciting versus dangerous. And they're, in some cases they're subtle, but I think I like to be able to think that you can develop an ability to read people by their behavior. And so I don't know if that's a very good answer to your question, but I try and use those sort of skills to understand the posturing that goes on in a meeting, for example.
So it's the intangible.
It's somewhat intangible. Now, in terms of tangible, I guess one of my things I often will say in a meeting is, what keeps you up at night? Like, give me the reasons why this won't work or potentially not work. And the answer that you don't want is, oh, there's nothing. We're good. If you get that as an answer, I suggest, immediately exiting the story. This is dangerous. Because anybody who's realistic, and knows that we're all dealing with odds making here, really, right? So there's always a chance that something doesn't work out. So again, that's just another bit of an intangible, but I like to ask, what keeps you up at night? What could go wrong? And if you get a good answer to that, I think it builds confidence, actually.
So before you go, I know our last interview was cut short. Are there any more resources you'd like to share with my audience? You mentioned Inc. Research last time, and I believe Stockwatch as 2 resources that you consult. Are there any more resources you would like to share?
Yeah, I remember that we chatted about that afterwards, because I felt like, oh God, there were a bunch I could have mentioned, then I either didn't think of it or we ran out of time. Oh, just getting back to Inc. for a minute. I don't think I got around to mentioning the fact that they have a blog area on their site that has some really good resources. And there's one there, a blog called Power Players. And I specifically recommend that people read that, because it basically has about 120 odd articles of, as it sounds, power players, people who have really are the movers and shakers of the world, and their accomplishments, and some of the stories that they're involved in, and so on. And so getting educated on that list is a great resource. Another one that comes to mind, I don't even think I mentioned it last time at all, but it's a funny little program called Chart Smart, and it's really quite unique. It's an end of the day charting program, but it offers the ability to filter like no other. There is no other piece of software that's anything close to this. And it really applies to the junior mining world. And so aside from the fact that you can search for any, if you can think it, you can search for it. So for example, like, stocks that are trading within 5% of the low of the year, all the technical indicators, Bollinger Bands, MACD, all the standard stuff. But you can also do a search on a phone number. So for example, if you're dealing with a junior miner, under the summary, it says shared phone numbers. I don't think there's any other database like this anywhere. So you can click on it and you can find how many companies are being run out of that same office because they share the phone. So again, it's just it's a funny sort of quirky program, but it's got some really cool built-in features to it. So I use that a lot. So for example, at the end of a month or whenever you get around to doing it, you can set up a filter and search for, mining stocks that are, trading at their low of the year, and a market cap under X and a share count under X. So you want to find, like, as we were talking last time a lot about shells, you want to find all the 2 million share shells that trade on Vancouver, for example, on the venture. You just do a search for share count under 2 million and you get a list, and you use that as a source of doing due diligence. So that's ChartSmart. Again, I'm not affiliated with any of these guys, but
nor am I, and I don't own any of the companies that Mark mentioned, but I will be looking into them.
One last quickie.
Yeah.
Google. I mean, we all have a Google account, right?
Mm-hmm.
But if you go to google.com/alerts, which I don't think a lot of people do,
mm-hmm.
it comes, an alert page comes up, and you can set alerts for anybody, a name. I could do a search on Bill Powers, right? Google, and any mention of you on the web in any news release, et cetera, comes into my email. So it's a neat kind of puzzle, Bill. You go to Power Players, you find out who the movers and shakers are, you put those names into your Google search, into your and you get the emails. So whenever,
And will Google Alerts alert you to specific filings in Canada? Like, how specific is it? Or does it have to be a news article with a certain viewership?
It won't alert you to filings. No, it's more press releases and general articles that they scrape through the internet. Most filings are sort of behind a paywall, I think. So that becomes a slightly different matter.
Well, Mark, go ahead. Sorry.
But I actually just very recently became aware of another site called investorx.ca, which is a smart CDR, if you like.
Oh, really?
Yeah. It is a pay site, but it's, I think, very modest. And you can go in there and you can do keywords and you can get alerts on different things. And so it's CDR with brains, if you like. Yeah,
it's not stuck in the 1990s, right?
Exactly.
Microsoft DOS or whatever that program was that we all used to use.
Right. So that's a bit more on the resource side. I think that covers a few more of the toys.
Well, before you go, I always give my guests an opportunity to have more people follow them. So do you want anybody to follow you? If so, where should they go?
Is no a bad answer?
No,
here?
You can do one interview a year with me if you want moving forward.
Well, let's do this again next year, and we'll see how those three names perform.
Okay. Yep.
How about that?
That's a great point. Well,
last time I mentioned, the fund that I'm involved with is it's called Taraz Holdings, under the Spartan Fund Management banner, and people can look that up if they like.
Excellent. Well, thank you for your time today, Mark.
Thanks again, Bill. It's always fun.